Welcome everyone to our small business webinar series. Today's webinar is Bootstrapping 101. And I'm Molly Heffernan, Director of Marketing for the Tory Burch Foundation. And I couldn't be more thrilled to be here with Ramona Cedeño. Ramona is a CPA, CFP, and CEO of FiBrick, if I got all those incredible credentials right. And FiBrick is an accounting firm that works with technology startups and small businesses. So her superpower is really transforming startups and small businesses into profitable powerhouse companies. And I think that is something that we can all plus one. We all want to be profitable powerhouses. It's why you're tuning in today. So Ramona, we are so thrilled to have you here to talk about bootstrapping essentials. So everyone tuning in, we are going to have plenty of time for Q&A. Make sure you use that Q&A box and drop all your questions there. You want to know why? The chat moves really quickly. There's so many of you. Let's keep the chat for all that good, fun energy. Use the Q&A box for your questions. We will do our best to get through as many questions as possible. Ramona is really going to guide us through everything for Bootstrapping 101. Today's session will be recorded. So if you missed something, don't worry, and you can watch it back later. And we will send out the links to you all after the session. So with that, Ramona, I'm going to toss it over to you to take us through your amazing presentation.
I was thinking small business owners out there, and we appreciate about me and the presentation agenda that we have for.
Oh, Ramona, I think you're freezing a little bit.
Bootstrapping, the fact that you invest your time and your own savings and your efforts, your sweat equity, your sweat compensation into your business, that's already bootstrapping. So Bootstrapping 101, bootstrapping your business is the presentation for today. And let me tell you a little bit about me, and Molly did a great job introducing me, but let me tell you a little more. My name is Ramona Cedeño. I'm a CPA, CFP, Certified Financial Planner. I have a bunch of credentials in finance just because I love finance, love numbers, love accounting, love taxation. You put a spreadsheet in front of me and I'm like, my eyes lit up. I have been a founder of FiBrick for 7 years now, and we work with tech companies and professional service firms that are in need of tax planning, tax advisory, bookkeeping, and controllership work, or fractional CFO services. We have a team that specializes in each of those areas. I serve as the CFO for the clients that use us as a fractional CFO. And we help with just setting up the best practices for bookkeeping or helping founders get ready for fundraising, exiting their firm. So their services range very widely. And recently I wrote my first book. It's called Simple Choices, Big Rewards in Money. And this book is about personal finances because I truly believe that at the end of the day, it's the individual that needs to feel financially empowered. The business can be doing very, very well, but if you are not taking care of your personal finances, 30 years might go by, your business survived, provided jobs for everyone else, provided for your living expenses, but I want you to think about your future and use your business as a way to build your personal wealth. So in the book, I talk about just my story with money, my journey with money, and I also provide my advice to those that are reading it. Great. So I want to hear about your business. Where are you in business? All of you, the 150 plus of you that are here in the chat, just for fun, let's tell each other where we are in business. Have a number one, enter number one. If you just have an idea and you're here to kind of figure out how to get started. If you have been in business already, but for less than a year, is it 2? 3, if you have been in business 1 to 3 years. a 4 if you have been in business 3 to 5, and a 5 if you have been in business for over 5 years. I would be a 5. I have been in business for 7 years. So come on, vote, no vote, just share with everyone. Great. Oh, I see a big range there. Lots of 1s, 3s, 2s. Awesome. Thank you for playing along. Wow, launched in 2004. Congratulations. This is amazing. I remember going to a conference in, I think it was San Diego, and it was a software conference. I used to go to the QuickBooks Connect conference and the NetSuite, which is another accounting software, their conferences. And it was year 1, 2, 3. I was doing all these investments in my business conferences because I'm going to meet people or learn something new about the software that I want to use. And I remember talking to this guy who had been in business for like 30 years. And I was still scared. I was like, oh my gosh, this is year 1, 2, and I have 2 clients, 3 clients. How is my business going to grow? And I asked him for some advice. How did he do the things that he did for the last 30 years? And he was kind enough to share the mistakes that he made. But the one thing that he said was to me, if you make it to 5 years, there is a great chance that your business will continue to be successful. And when you're 1 year in or 2 years in, it sounds like a long time, but you just continue to do your best and plan and organize everything that you do, have good processes, get the right clients, do the marketing in a strategic way, take care of your finances, and year 1 is going to pass, year 2 is going to pass, and before you know it, you have been in business 5 years. And it's a huge milestone. So congratulations to those that have been in business 5 years, and those that are not there yet, just continue to do what you're doing. And 1 year at a time, you're gonna get there. Awesome. So the first thing that I would like for those that have not started their businesses, I went through this 7 years ago. I quit my job one day when I was like, that's it. I don't want to work for someone else anymore. I am going to try something else. And I quit my job and I went home to my kids, my husband. And the first thing I did was I cried. I cried for like 30 seconds. I need to let this out. I'm so disappointed that I had to quit a job. And or not disappointed, but it was different for me. I had worked for prior companies for 10 years, 5 years, and then this last one, it was like I just need to find something else. So I had never quit. I never quit a job before, so it was shocking to me. So I cried for 30 seconds, and then I said, "Okay, I feel better. What do I do now?" My husband said, "Why don't you start your own business?" My friends, when I started talking to them on the phone, said the same thing. And it was scary. It was really, really scary. Luckily, I had learned a lot in my prior job because it was a startup. So I saw how they were doing things and I could leverage some of that. And I also have friends who own businesses and I could lean on them. But the other thing that I had already, just because I am the person that I am when it comes to money, I already had some savings. And I was okay taking a break from having a 9 to 5, 9 to 6, and figuring out this business situation without panicking. I understand that's not going to be everyone's situation. But if we are thinking of quitting our jobs to start a business, let's plan that a little for a few months and accumulate some type of cash reserve. And this cash reserve is not for your business only, it's for you to feel that you can pay your rent, you can pay your mortgage, you can continue to pay for your kids' college where your business picks up. And some of the ways, of course, we will accumulate our savings. Let's say a year from now, we want to start our marketing agency. I'm working. Let's see how I can reduce expenses, personal expenses, maybe increase my salary somehow, ask for a raise so that I can save up that increase over the next year, and just continue to really focus on building that cash reserve before we decide to start our own business. Just because if you start a business, and this might sound logical, but we don't sometimes think about it before we're in the situation. If we start a business when we had financial troubles, we're going to spend so much energy thinking about the financial situation that we're in, that we won't give 100% to that business. So unless you're starting a business to solve your financial situation, negative financial situation, because you know that business is going to suddenly generate a lot of cash for you, the recommendation would be to have that safety net first. You can, some people get bonuses in the first quarter of the year. So we put that aside for investing in our business. We maybe have some extra cash in month one, and we invested in something that is conservative. We know that it's going to give us some return. And we can maybe ask families to give us some money to start our business. And some of them might say, okay, I'll invest in your business. You can pay me back. I'll do this to my sisters. If they ask me for any money, I'll say, well, I can give you some money that you can return to me with a little bit of interest when the business is doing well. So it's not really a gift, but it's kind of like a, a gift/loan. And the last one is this tax refunds. And I mentioned this because I have clients that get their refunds. Tax refunds are not free money. It's money that you have overpaid during the year. But for some reason, there are people that do continue to get them, not our clients or not clients, that every year they somehow end up overpaying, or they have extra deductions and they get these refunds given to them. Save that for your business if you're thinking of starting a business. And I think this is a good time for me to, I just realized that I didn't necessarily explain to you what bootstrapping is, and maybe this is important for some of us here, but bootstrapping is when you actually fund your business with your own cash resources. You're not going for VC funding. You're not taking any equity financing from investors. You are investing your own money and your own resources. That doesn't mean that you cannot take a loan from a family member or a loan even from the bank, but it's still your cash. You're responsible for paying this money back or replenishing your savings if you're using your savings, if you decide to do that. So that's what bootstrapping is. Great. The other thing that as you think of, building your business with your own resources, not taking money from other investors that then will expect equity from you. We want you to think about non-cash resources that are available. There is so much value in the services that small business owners are getting free of charge from government agencies, from nonprofit organizations like the Tory Burch Foundation, right? You have fellowship programs, you have mentorship programs, you have entrepreneurship programs that provide a lot of resources that you would normally have to pay for. So as you're going in business on your own and you want to not have to bring in investors, think about how you can keep your costs down. That's a way of supporting your bootstrapping decisions. And there is a lot out there that you can leverage as long as you use it intentionally. And it's not just, I go to this event to just go and see what I can get from it. I recommend that as we're thinking of getting resources, free education or programs that are available to us as business owners, that we first put on paper or on your computer somewhere the areas of your business that you want to focus on. So let's say you want to improve your financial management, the financial management of your business, or marketing, the marketing aspects of your business. When you plan the courses and the programs that you want to participate in, focus those programs, find those programs that support that area that you want to improve in the business. So if you want to get better at marketing, decide that for the next 3 months, 6 months, you're going to intentionally select the marketing events that you want to attend that complement each other to get you to that place where you want to get with the marketing of your business. So there is a ton out there, but I still want you to plan, to have a plan of how you're going to leverage these resources and make a decision that you're going to commit to get as much as you need to get comfortable improving that business aspect that you want to improve. So I have some examples here of non-cash resources that you have. You have peer advice. You have friends that are already in business and they won't charge you for you when you go to them and you ask them, how do you decide who was your ideal client? How do you determine who you wanted to work with? How do you hire for the open roles in your business? As long as you don't go to them 10 times in a month for the same thing, but reasonable asking for advice, it's just totally fine. You have government and non-profit organizations that are there to support you. The Small Business Administration, SCORE, Women Entrepreneurs of New York City is a great resource. Again, some of these organizations, and I mentioned the Tory Burch Foundation, but some of these organizations are going to have workshops, one-off events. It's your responsibility to bucket them into specific categories and keep track of what you learned in one and what you are missing from the next one, so you don't waste a lot of time going to events that aren't the same. That is going to be how to market on social media, and you go to 5 of those when you already know how to do that. Let's find another one where it's how to build partnerships with business, other peers in your industry or other providers that might be able to offer your services along with theirs. There are also online tools that are free and that are so invaluable. Imagine if you had to pay for Instagram, if you had to pay to have a LinkedIn account. When we had to pay $30 a month, $50 a month for an online tool, we feel like that is a burden on the business. But we take the free ones for granted. And I want you to see how much value there is in that, to feel that the encouragement that, yes, I can build this business on my own because I don't have to come up with 100% of the value of the resources that I need to make my business successful. And you have networking groups also, a ton of them. Some, I have the Chamber of Commerce, I have Hey Mama here, there is the Crew, there are a bunch of them. Some will have, yes, a fee. You can find the ones that are free, and some will have a small annual fee. They always be, again, intentional about why you join a team, why you join a networking group. Is it to find partnerships, support others, supporting business owners? There is a value there. I have joined organizations where I meet other CPAs, and they are there when tax season is booming, and I have a question on how to, does a person in California qualify for X credit? And I know that one of my peers has dealt with that. It is so great to have them there. So don't undervalue the partnerships that you can build when you join a networking group, but do know what is that you expect from that group before you invest in it, and before you invest not only cash, but your time also. Once your business starts, business is operational, you are providing services, and you are, you decided to leave your 9 to 5 and 9 to 6, and now I think it's like 9 to 10, right? Everyone is working all over, all day long and all weekends if you let your bosses have their way. But once you decide to start your business, and maybe this is a second business, it's any business that you are in the process of starting, but also keeping and maintaining and growing with your own cash inflows. It's important that you know where your cash is coming from, what cash resources you have available. And sometimes we don't think about the fact that, yes, my company is not, the profits are a little low right now. But I do have a potential project with the state or the city that's going to start in December. And I will have a lot of cash coming from that project in a few months. But today I have no cash, right? I have no cash for my business. But guess what? The access to loans or the access to a line of credit, the access to a credit card is access to cash. The option to, the ability to be able to borrow, the ability to borrow for a few months, working capital, or use a credit card to support the business while the money comes in. It is access to cash. Now, any debt that you take on has to be done responsibly. We don't advise that you get into debt just without a plan. How are you going to pay that back? Can the company absorb the money, the payment? Is more cash coming in where I'm going to be able to get out of debt? It's important that there is a plan behind that. But some of the sources of cash that we should ensure that we are looking into are, again, personal savings during the start of the business, but also when you have a business, sometimes you can be the lender to your business. You can take from your savings and lend the business temporarily for a couple of months, lend the business some money until the business recovers. And this can come from some sources of cash. Never, ever from your retirement account. Okay, I am never going to approve that, ever. You don't take money out to lend to your business. And I know some business owners have done this to start a business. It's very risky because what might end up happening is that you don't put the money back, or you miss out on a huge potential market gain, or that by the time you try to invest it, everything is super expensive. The shares are super expensive, the mutual funds, and you lost that potential growth in your retirement plan. So there are many reasons why we wouldn't recommend that as an option. The other source of cash could be grants. I put Hello Alice here because Hello Alice is a great resource to find grants available to small business owners. They publish a lot of them. And I know Tory Burch Foundation has also access to capital resources that you can look into. So do your research, sign up for these newsletters. Make sure you have the newsletter from Hello Alice, that you have the newsletter from Tory Burch, that you have newsletters from your Chamber of Commerce. Any organization that provides resources, sign up for the newsletter. Actually, I have a very good newsletter. We have a good newsletter too, where we combine some of the resources available there that we find each month, and we add them to our newsletter. So you can sign up for ours too. There are grants that private organizations have. And I just have a few examples here, just to give you an idea of what private companies are doing to support us. Facebook, Verizon, Lenovo, FedEx, all of these organizations came to support small businesses in the last few years. And these are opportunities that I think we should not let go by. I received a grant from the Fearless Fund early during COVID. And it was a great process. It was a good process. They gave us a membership to the crew. And I think that was for women of color, business owners that were women of color. And it was great to see that they were really supporting us. And the application process wasn't difficult. So they are available and you can get them. And then the government, from time to time, has grants available to us. We saw like the SBA had the EIDL grant and the PPP loan. And I know the requirements sometimes are strict, but hey, you might qualify in year 2, year 1. Something else might come up where your business will be ready for that. And some of you have been in business for a while, so you probably will qualify for some of these grants. Loans, bootstrapping doesn't mean to be loan free. It's just means that you will be able to pay back that loan from cash produced by the business. It is cash that bootstrapping will depend on the cash that the company generates and your savings that you're investing in the company, but also loans that you are able to take and repay. The SBA, Small Business Administration, has loans for small businesses. They have, right now they have a micro loan that's up to $50,000, and the average they give out is $13,000. The process for some of this, it's going to be painful to us, the one don't have time, but it's worth it. Sometimes, yeah, they ask for a lot of information. I know that sometimes you have to be in business for at least X number of years. Let's just go with the flow, get ready for when we qualify, learn what would qualify us in case we need these loans in the future. Everyone should be loan ready, always. Personal, at the personal level, at the business level. If you don't qualify today, let's not sit back, complain, and not do anything about it. Let's figure out how we qualify the next time. So always be loan ready, and as a business owner, but also within your personal finances too. And then your clients are a good source of cash. And this is very interesting because I heard one day, have your clients be the one funding your business. And when I heard that concept, I was like, what does that mean? How are my clients going to lend me money, right? But no, what I learned is that by having the clients pay you upfront or give you a deposit, give you a down payment, give you a retainer, you can use that cash to fund your business for that month. If you can have your payment, your service agreement be ones that requires that your clients pay upfront on month one for their services, you can then have the cash to support the expenses for that month. It doesn't mean that you're going to live paycheck to paycheck within the business, right? It's not like, oh, I get 10,000 from client on day one, I'm going to spend 10,000. That's not what this means. It's just it supports it complements the other cash that you have, and it just continues to create a little bit of cushion for you. So this concept of prepayments and down payments, sometimes I hear business owners say, well, my clients don't really pay upfront. My clients don't, they pay 2 months late or in arrears. Especially if you're working with the government, that could be the situation. And with very large organizations, they might not accommodate your terms. Again, this is where we, instead of just accepting it the way it is, we find ways to work around it. Client 1 and 2 are not going to pay upfront, but maybe clients 2 through or 3 to 10 can. So diversifying the clients too, like figuring out who, which client can absorb the payment upfront and which ones can't, and how I do this mix of, payment clients that pay upfront and clients that don't. It's going to be also key, but it takes thinking and strategizing and really implementing your policies and your procedures within the company, within your organization, to implementing and making whatever you agree to with yourself to do, that you make it happen. We have clients that we work with, larger clients. We have worked with Shopify. We have worked with Chief or Dovetail that were acquired by larger companies, and we have to adjust sometimes to their payment terms. But we have also worked with clients that were new clients that are large, and we say to them, you are a new client to us. We need to, we have a policy that we get a down payment for a big project, because we really don't know the payment history. We don't have a payment history with you. So we take a deposit. And if they really need the service, and if we are going to do something that no one else can do for them, they most likely will say yes. So that's another thing. How do we set up our business, our brand, so that the people that want to work with us want to pay timely, and pay the value of our services. That is like a whole different workshop on setting prices and payment terms and positioning our brand. There is so much we can talk about that, but as you build your business, I will remind you that you want to become amazing at what you do. And by you, I mean you and your company, where people are looking for you, they want to work with you. And if they want to work with you, they're generally willing to pay the value, the price of your services, and pay timely to keep you happy. As you continue to grow your business, always think about growing, scaling. Continue to apply lean startup practices. What this means, and there is a book called The Lean Startup. What this means is that you want to invest and spend in your company, but on things that are going to have a return on your investment, on things that you need for the business, things that improve your services and the quality of the product or your services, that enhance your employees' morale, things that really add value to your company and will help you generate more revenue. Anything that you're spending on that is really not adding any value, that you can live without, do not spend on it. And I'll go through a few tips here on how to do this. You want to, for every expense that you have in the company, you want to evaluate the potential return on investment. So ROI. Am I going to get something out of this investment? And let me tell you, like, the way I do this is, if it takes me 3 hours to put together a proposal, and I can hire an admin to do that, and it takes her 4 hours or 5 hours, what I pay her, it's not the same that I would get paid by my client to do some other type of work. So I weigh the cost benefit. I do the cost benefit analysis. I invest a fraction of what I would be charging for me preparing a tax return or providing consultancy advisory services to a client. Why spend 3 hours putting together a document that someone who does not have my experience can do, and who, just the way life is not at the level where she will get paid or he will get paid what I would get paid. So that's how I determine how to invest in outsourced services. Know what you should, this is timely. Know what you should be outsourcing versus doing yourself. And it's the same idea. If you're putting a lot of time in and you are giving up the possibility of generating revenue at your rate, at your level, outsource it to someone else. As long as if you have the free time, you have nothing to do, which I doubt. If you have nothing to do, I recommend that you go out and do business development. That will bring you business. But if you really want to do this on Sundays when you cannot go out and market your business, then you can do it. But the other consideration is what you will outsource. If it's something that you cannot do very well, it's not within your expertise, it might get you in trouble. But if you do it wrong, I would say outsource it. That's like legal work, accounting, marketing. If you want to really create like a very fancy marketing campaign or a strategy for your business, probably something that if it's not within your area of expertise, might be better to outsource. Choose variable costs over fixed costs whenever possible. So variable cost is something that you can, that fluctuates based on need. So let's say you, versus fixed, the easy example is if you sign up, if you have rent expense, if you get an office where you pay $1,000 a month, whether you use it or not, you pay $1,000, that's fixed. If you get a space that you pay as you go, you do the comparison. Do I use it more than X number of times a month? Is it going to be over 1,000? Then you do the comparison. But if some months you're going to use it 0 and some months you're going to use it a lot, you might be better off doing the variable option. And this also applies to a lot of software applications out there. There are applications where you can upgrade, downgrade at any given point in time, like you have maybe Zoom or MailChimp. Look for options where you can do that instead of committing to a fixed amount for a year that you cannot get out of. Use free versions of online tools for as long as possible. So figure out what is the feature that I will get for upgrading. And if it's not something that you need in the moment, don't upgrade yet. And reduce non-essential expenses. Try to consolidate applications. And these are simple examples, but this applies to anything. Payroll expenses, where you have one person that is the office admin and then another person that is maybe customer relationship. Can you combine these two and make it a full-time job and save some costs? But within software, I always say consolidate whenever possible. I have seen clients that still use a CRM tool, customer relationship manager, and a marketing tool. They each pay $100, but you can find one that does both for $150. That's an example of combining. And anything that you don't need, get rid of. This is just an overview of what financial statements will look like, your profit and loss and your balance sheet. Preparing your financial statements and reading your financial statements, it could be a 2-hour event. But I wanted to show you this briefly. You can do this in Excel if you're not using an accounting tool. But if you're using an accounting tool like QuickBooks, Wave, Xero to do the bookkeeping for your company, as long as you classify all the bank transactions, your system is going to generate your profit and loss and your balance sheet. The most important piece of this is that you need to read what the system is generating. If you're preparing yourself, you need to analyze it. Why is my gross margin so low, so high? Why do I have a net loss or such a low net income? Which expenses here can I reduce? Why do I have a contractor for $1,000 a month? Can I get an employee part-time that would be $500-600 a month? That's just an example. So you go through this and you figure out trends. Why is revenue going down? Why is it going up? What can I do to increase it? So the bottom line is that we need to use the data to understand what happened and why, and then make decisions using that information. Focus on 3 key numbers when you're looking at your finances. I'm not saying that these are the 3, but these are 3 examples: gross margin, gross profit, and revenue growth. We should always be focusing on this. But in addition to this, there might be numbers in your business or in your industry that are key to you, to your success of your business. For example, if you are a service provider, if you are an IT company or an IT consultant, and you have a client and you bill your client $500 a month, but you have a client that uses your time so much more than the other client, and you see this pattern in a few clients take a lot of time and other clients don't take that much time, you might need to create a key performance indicator, a measurement number, to see what is your revenue per client. What is the number of hours invested on average on each client? That way, when you see your revenue per client and you are saying, okay, my revenue per client is only $200, like, does this even make sense? I spend at least an hour on each client. So there are other numbers and other metrics that you might need to track for your business specifically that don't apply to every business. Again, we're not going to go in depth there because we don't have the time, but I wanted to bring this up because as bootstrapping your business is not just about, do I have enough cash to put in my business? That's not it. It's more, it's how we run the business, how, in order for the business to survive with our own cash and the cash that it's producing, we have to make sure that the business is optimized, that the financials are optimal, that we're not wasting, we're pricing right, and we're collecting timely. There is a lot that we need to do every day to be able to sustain the business financially. Cash flow projections, this is where you estimate where your cash in and cash out is going to be. This is very basic. You can do this manually, but your accounting system will generate this. you have beginning balance, AR collections is accounts receivable collections. How much do you expect to get from your clients? How much do you expect to give yourself as salary or as a distribution? What payments are going out this month? You look at this every month, every week. Some clients do it daily. It's really to know where you are cash-wise. The fact that you have $50,000 in the bank doesn't mean anything if you don't know how that money is going to decrease or increase in the next few weeks. And best practices for managing your cash flow. Make sure you have the right price model, that you're pricing your products and services correctly. Manage your cost of goods. So this is cost of goods is how much it costs you to produce your services or to produce your product. And that is the cost that you cannot eliminate as long as you provide a service. So as a tax accountant, I need tax software. I cannot get rid of my tax software, right? So I need to manage the cost of my tax software. Spend, invest, and cut back strategically with a plan. How do you spend the money? How do you invest? This is from the company perspective. Why am I investing in a marketing strategy? Why am I investing in a customer relationship management? What is the value that's going to bring back to my client or to me? And when I decide to reduce an expense, is that going to hurt my business in any way? Invoice and collect from customers timely. This is very important. If your customers see you billing, whenever 1 month is on day 1 and 1 month is on day 10, they're not going to respect your deadlines and your due dates. So you have to do this on a consistently basis, timely. Great. So we are at the end of the workshop. I can't believe it's been like 45 minutes. It goes fast anytime we talk about these topics. Oh my gosh. But I wanted to offer a free resource to you. If you go on my website, you can get this 7-day email course, Taxes and Profits, and we can start queuing up the questions. You get this on my website, FiBrick.com, and the courses tab, and you can sign up for free, and you'll get an email every day with some tips on taxes or profit maximization. And the book is available on Amazon. You'll get a lot of nice stories there. There is an ebook version, which is a lot less than the paperback. And please connect with me and sign up for our newsletter, which you can do on the website. If you're able to scan the QR code, it takes you to all the links. You just select Instagram, LinkedIn. I am very active and I respond to all the messages that you send me privately. So I look forward to hearing from some of you. And thank you for your time. And I'll take some questions now.
Yeah. Well, thank you so much, Ramona. We have a ton of questions that have come in. So I'd like to start with going back to those 3 key numbers to know. So it was gross margin, gross profit, and revenue growth. And a lot of times in our experience, founders sometimes are conflating those different numbers with each other or maybe project. So what are some of the common mistakes that you've seen people make around those 3 numbers so that everyone can avoid making those mistakes themselves?
Yeah, so on the gross profit, the gross margin one, a lot of times the mistakes come from not pricing your services correctly. Just today, I had a conversation with someone who said, we are not billing our clients enough to cover our costs because we didn't analyze how long it was taking us to produce our services. So those 2 numbers, the first 2 numbers, gross margin and gross profits, are going to be depending on your revenue, the pricing, the volume in your revenue, but also how well you manage your costs. So the biggest mistake is not paying attention, not reading the data.
Read the data. That is such great advice. My questions are going to bounce around a bit because everyone has sort of a different a question here, but Monica asked to go back to your statement about loans. How should entrepreneurs here who are bootstrapping start thinking ahead and be loan ready? What are the actual things they should be doing?
Very good question. So you would want to have your own credit score be as good as it can be. You continue to manage your personal credit because unfortunately, as a small business owner, your personal credit will matter. There is always going to be a personal guarantee there. But also for your business, make sure that your revenue is growing. Try, as much as you can control that. The higher your revenue, the higher your line of credit might be. And have healthy financials, good profit margin, positive, and everything in order. Your taxes filed, your income statement makes sense. You don't have a messy balance sheet. So all of that.
Great. That is great advice. And we did get a question as people registered about the best way to establish then business credit once I have my Dun and Bradstreet number. So can you explain for us a little bit about what that all means and how to do that?
Yes. So the DNB is the one that maintains the credit history for your business. What you want to do is, as you start building credit for your company, let's say you get a line of credit, a small line of credit from your bank, you want to ask them if they are reporting the payment history of your business to the Dun & Bradstreet organization. And the same thing if you get a business credit card. Sometimes a business credit card is not really a business credit card. It just says the business name, but it's really under your name. You need to ask that question. Is this being reported to the credit bureau on the right business tax ID number?
Great tip. And so this actually lends itself well to a question that Amika asked here in the chat. Or in the Q&A box. So you're ending the year with net profit, but you have credit card debt to repay. Would it be best to take a loss for the year and pay the debt in full, keep some and pay the debt over time? Like, what would you, not knowing all the details of her business, recommend to somebody in a situation similar to that?
Yes, it's hard to, there is not a one size fits all, but one thing to keep in mind is that the profits will be taxed as profits, even if you use it to pay the credit card. So you're not really reducing your profit by paying the credit card, you're just reducing your cash. But the other thing is that if you're paying a lot of money on interest, it might be time to refinance that debt by either finding another option that's lower interest rate, or you pay that one and then you pay that one down, but then finance new purchases with another credit card that is lower interest rate.
Great. Well, Danny followed up with a great question. So what is the best way to manage the financial risk of taking on another employee? What do you recommend? I know that's kind of a big
Yes, I get this. It's a very scary decision for every business owner. What I recommend is that you do a cash flow analysis to see how healthy is the company's cash, and then that you have at least 6 months of cash reserve to pay that person's salary. And it's not that you need to have 100%, that person's salary, but that, you have more money coming in, your business is healthy, revenue is good, you have a monthly profit. In addition to that, you have some cash reserve that you could use to invest in that employee. And then having that working capital line of credit, that gives you a lot of peace of mind. Just to go back to the line of credit, a line of credit you can get from your business, from your bank. And sometimes they give you like 10% of the revenue. So if your revenue for the year is 100,000, you might get a line of credit of 10,000, and you only pay interest if you take money out of it. And then you pay a small fee per year to maintain it. It's the best option for emergency cash line of credit.
Great. Well, you mentioned retirement and that we should never be dipping into our retirement in bootstrapping and starting our companies. But how do you plan for retirement when you are the business owner?
I love this. So as a business owner, you have so much flexibility in terms of investing for your retirement. The small business retirement plans are very good. You, as a solopreneur, or even if you have employees, you have the option of contributing. As a solopreneur, you can contribute 20% of the company's profits in a small business retirement plan. As a company that has employees, you can have a 401k where the employees contribute and the company contribute for yourself. So it's really easy, if the company is profitable, to contribute to your retirement. And I always recommend that you start early, even if you don't put the max, so that you get into that habit of putting some money aside from your business into your retirement.
That's great advice. And so I guess a follow-up question to retirement, there's a question here about gathering a line of credit from home or real estate property to fund a business. That is something that we do hear that entrepreneurs do quite a bit. Are there things that people should be doing to protect themselves if that is the option and route they take?
So this is where they take a loan against personal property or real estate property to fund the business.
Yeah.
I was going to mention that sometimes business owners do this from the retirement account too, where you can take a loan. That's better than taking the money out. So you can take a loan from your retirement plan. And sometimes it's the interest is lower or the interest is reinvested in the plan. So also look at that as an option, but again, not the first option I'll go to. But taking loan against property is risky because if you don't pay the loan, you might lose the property. So I don't recommend it, and I haven't seen it done ever in my life with my clients. So it's not something that I'll go to first.
Okay, great. Well, in an effort to be financially sound and bring in and have the right people helping you with your finances, what are some of the ways to find a trustworthy CPA, questions people should be asking to make sure that they build that trusted team of advisors?
Yes, sure. So the best way is to find someone that you actually either get recommendation from a peer business owner, or that you have met before or you have seen present, or just someone that you don't grab someone from Google. And then once you meet with at least 3 potential service providers, and you ask questions, and you can see where there is consistency or not. You can see how easily the person responds to your questions, and also what additional information they share with you during that conversation. And if you have done some research about a particular tax issue that you are concerned about, like I'm interested in using my business to fund my retirement account, when you bring that up, see how knowledgeable they are or how they handle the question, and you'll get a good feel of how that's going to be when you work with them.
It's great. So we had a lot of questions connected to the concept of ROI. And I guess, how do you measure ROI, or essentially your investment in something that is not necessarily directly tied to growing your service or growing your product, but you're assessing your own time, maybe your physical space, and what it does for maybe you emotionally, like all of the intrinsic ROI?
Yes, that's exactly the way to do it. Does it make my life easier? Am I happier? I recently moved, and I bought a house, and every time when I wake up and I'm like, oh my gosh, I love being here. It's a switch, right? I used to say, I'm never going to buy a house. It's so much work. And I have my apartments and it was great. My mortgage was so small. And then it's like, oh, but I'm so happy here. I wake up and I want to work here, right? So there is a lot that is not just necessarily revenue related. It's about your peace of mind. It's about how calm you stay. So investing in an app that helps you meditate. There is no direct, connection to revenue, but it makes you smile throughout the day, and then it makes you more productive, and it makes you have less issues with employees and customers. Then you're getting your money back.
Yeah, absolutely. I always hear the advice about like just assessing whether or not what you put your energy into gives energy back to you as well. Yes. So another great question came in. This is much more formula based, but is there a suggested year-over-year growth percentage that somebody should be aiming for? And is that the way to assess the health of your business?
So when we talk about just seeing growth year over year, just normal, we want to see some growth, 15%, 20%, 25%. But if you talk to a business coach, they'll tell you should have huge, big, audacious goals, right? And that means you're going to double your revenue. So one is, if you don't have a growth plan that you want to pursue in a given year, a growth of 15, 25% is still healthy. But if you have a big goal that you want to accomplish in year 1 or year 2, year 3, you have to go for a lot more, 50%, growth increase, but you have to have a plan behind it. How are you going to get that? Is it a marketing campaign? Is it acquiring a business? It's going to be something very significant.
Right. How does the investment, whether it's financial or of your time, connect to that growth number is just so key.
Yes.
So another question came in around kind of in this vein of accounting and software. So is there a software that founders should be using? And similar to interviewing CPAs, like what should you be looking for in a software's offering for your accounting?
Yeah, so the first thing is figuring out who is going to use it, if it's you or your marketing person or your bookkeeper, because if it's you, it has to be good for you. But if you're thinking that you might have to transition that function to someone in the future, then you have to find something that is easy transferable to the other person.
Okay.
And then the other thing is, what does it do? Does it connect with other software that you have? Does it have all the features that you want? And also look at price increases. This is something that we don't do a lot, and it's hard to find, but there are some software that are increasing their prices every year. And sometimes they're too low to be true. That also might be a flag, because then in 2 years, they're going to double it. So look out for things like that.
Yeah, none of that net effective. That'll get you.
Exactly.
And I guess of those softwares, are there any out there that you have found you would sort of stand behind or suggest people check out?
I love DocuSign. I really like for project management. We have one that's specific for accounting, but before that, we love Microsoft's products, not Google. So we use everything within Microsoft Teams, SharePoint, Planner. And it's a great tool. It's low cost and it offers so much, the notes. And then accounting, if you're doing it on your own, Wave is free, WAVE, it's free to use. We really like QuickBooks Online, and that's our choice. And what else? There is so much for marketing. We use ConvertKit, but we have our marketing team use that, manage that.
And like you said, a lot of the social media platforms or services like that, they have analytics free. Get good at those before you decide that you might need something else. Ramona, I am so conscious of time and how generous you have been with us. So if you could share one piece of advice to sort of send everybody off with in terms of good bootstrapping practice, what would that one thing you'd want them all to remember be? I
wanted to manage that customer relationship like it's a piece of jewelry, and that means the service has to be amazing, but also that client experience from the day that you talk to that person to the day that they leave your company is very important, that you're responsive, that you don't forget about them. So having a tool that helps you track where you are with your clients at all times. When was the last time you talked to them? So that comes with a good CRM, customer relationship manager. A process could be a process where you say, every month I'm going to reach out to these 10 clients. Do that. That's going to go a long way. Well, that is great parting advice. And Ramona, we cannot thank you